All right, it is Tuesday, August 15th, 8:01 a.m. Central Time, and we will jump into the trade planning exercise for today. Now, the overnight session has been quite bearish, and heading into the open, the main question is whether we are now going to get any kind of follow through and a break below the 44.69 RTH low, as well as the 44.59 to 65 initial support. And in order for us to get a bearish confirmation, the market would need to take out 44.69 as well as 44.59 on signs of initiative selling in real time. So that means we need to see a break below 44.59 and 69 on broad market weakness and some decent and sustained downside momentum. Now, even though the overnight session has been quite bearish, the only concern here is that the market has already made a pretty sizable move in the overnight session and the market may consolidate here. So today, even though there is potential for a break below pre-market and initial support, we do need to see that weakness in the moment in real time in order for that to take shape. And as long as 44.69 is holding, we could just balance within the recent range. And if we take out 44.69, then at the very minimum, it could limit the upside potential, because if the market takes out 44.69, then in order to take out yesterday's RTH high, we would need an outside day, which is a low probability event anyway. So the stats, I think, are around 10% of days are outside days. So if we take out 44.69, then the likelihood and probability of the market taking out 44.0775 would be quite low. So early in the session, our focus is going to be more so on the short side, because I think even if the market is going to reverse and put in a move back up towards yesterday's high, it's going to take the market some time to do so. I am not expecting or anticipating a large rally back up without any kind of rotation. Typically, when you see this type of pattern where you have this overnight strong failure and rejection, a intraday balance breakdown in the overnight session, even when the market makes its way back up, it takes a little bit of time. And if the market is going to head lower, we want to see ES holding below the 24-hour session midpoint and VWAP, because we know that on directional days, the market tends to hold on one side of the VWAP. Our initial resistance zone today is 44.88 quarter to 96 quarter. Now, technically, this is a relatively aggressive trade location, or at least it's not ideal trade location. The only time initial resistance works is if the overnight weakness is going to continue. And we are going in with the assumption that it's going to take a little more work for this overnight weakness to change. So we're assuming the overnight weakness is going to remain in play, and that's why we can consider shorting the initial resistance zone, especially on first test. Now, by default, Vulcan has put in the entry at 91.5. This may need to be adjusted in real time. It may need to be moved a bit lower to ensure that we actually get filled on the trade. So that's something I will play around with in real time, because, for example, if the VWAP by that point in time is by 89, then I may want to get in around 89 to 90 rather than 91.5. So for now, we're going to leave this at 44.90. We're going to set up another short at 4,500 to 10 quarter, and I'm going to make a copy of this zone and set up two potential shorts at 4,500 to 10 quarter, and one of them I'm going to place the stop not beyond the zone, but rather just behind yesterday's RTH high. So I'm going to go ahead and slide this to 08 quarter. That allows us to get a more aggressive entry at 45.02 half. So we're still using the same targets here, but we are prepared to take a slightly better entry or more aggressive entry at 02 half if the real-time situation warrants a more aggressive entry, because it's really going to depend on how we approach 4,500 to 10 quarter. As an example, if the market pops up to initial resistance and then balances and the market consolidates and then later in the day we break out, well, then the short setup may not even be valid. But if we go up there in a relative straight line, let's say that the market just puts in a small reaction at the VWAP and then goes up into the 4,500 to 10 quarter area, that could still be a valid short. And from there, we'll need to see if sellers can then step in and push the market back below the VWAP and back below 88.75. If they can manage to do that, then it could turn into a good trade. And if they fail to do that, well, then we might be looking at a complete reversal of this overnight move. And as day traders, we need to be flexible and open to the market moving in either direction. We need to have enough confidence in our view and analysis that we can execute the trade, but at the same time, we don't want to have so much faith and confidence that we are unwilling to change our view, or that we get so stubborn and so fixated on our expectations and our trade plan that we completely discount what's happening in the moment. So with the market being as indecisive as it has been over the last few days, I think we just need to remain flexible and adjust and adapt to the real-time situation. But based on the pattern and market action so far, the focus is going to be on shorting first test of initial resistance as well as 4,500 to 10 quarter, and then we'll see where the market goes from there. Again, in order for the market to really get more bearish, we would need to take out 69. And speaking of that, we can actually create a copy of even initial resistance, and we can just look for a move down to the overnight low. So we'll just make this 70 instead of 65, simply because it's a more conservative target here. So let's see what that looks like. So 92 entry with 97 quarter as our stop, targeting just the overnight low, and the pre-market support at 73 would give us 3Rs. So gives us a bit of a range to work with. So one of these entries can be taken based on how the real-time situation shapes up. So our execution area starts from roughly about 90 half and goes up towards 95, and this is the most aggressive execution. This is a bit more conservative than that in terms of entry and target, and then the most conservative short at initial resistance would be at 95 with our stop at the next zone. And then on the downside, I am going to be a little bit more careful on taking long setups today, simply because of how weak the overnight session has been. It's certainly a possibility that we could get a long setup off of pre-market support and initial support. Below the initial support zone, I want to be more careful on the long side. So we're going to keep these as potentials. You can see that the market doesn't have to do anything crazy to get 3R from pre-market or initial support. One thing I will change though is I'm going to set the final target for this to be 91 or so. Don't really need to look for a move beyond the 90 area. Essentially, I'm going to target the VWAP if I am buying initial or pre-market support. We know that 90 half is a potential short entry, so let's actually just get out at 90. And initial support, I think it's even better to get out earlier rather than later, because if the market even goes down into initial support, that would already be a bearish indication. So if the market is going to make a sizable reversal then we want to see 44.69 holding, right? So if we go down to initial support, even though that is the bias confirming zone, if we go down there, it may just limit the upside. So from initial support, we may just bounce back up towards initial resistance, and that could be it. So I think that this is a conservative approach at initial support. We are actually, I'd like to set this up where my scale is ahead of yesterday's RTH low. So 68.5 lets me get a relatively quick scale out, and so I think this is a good way to set it up. 63 entry, and I'm going to make just one variation of this where my stop is actually behind the naked VPOC, and see what that looks like. So 62 to 63 would be the spot to buy initial support, and that will require a real-time read. So for example, if the market is breaking down and liquidating on heavy downside momentum, the Russell is breaking below its recent low, the NASDAQ is taking out its recent lows, then initial support may not even be a long setup. At that point, we might be looking at a move down into the 47.5 to 50.5 area. So if we take out 59, I think there's a very high chance of hitting 47.5 to 50.5, and even 33.5 to 42.75 could get tagged in that situation. Now, as I mentioned in the morning trade plan, if we break below 59, we would have a bearish confirmation. Sellers would be in firm control. So even though the market would be exhausting the range potential by the time it reached 33.5 to 42.75, I think we'll still need to exercise caution there on the long side, not because we don't expect a reaction at that zone, but more so because the reaction may just be a intraday reaction that doesn't result in any major reversal. So our targets are going to have to be quite conservative off of those lower zones, because sellers will be in firm control by the time the market reaches there. So that's my concern with buying 33.5 to 42.75. I think that range exhaustion is helpful, but it's not a strong enough reason to fade a zone if you already have a bearish confirmation across multiple time frames, which is what we would have if the market reached 33.5 to 42.75. So I think it makes sense to be cautious at that zone. I think it makes sense to put your stop behind the 31.5 level, and on the upside, I would not look for a move back to 69. I think 59 would be the final target, and likely even ahead of that. And the high probability in this situation, might just be a pop back up towards 50.5 or so. So when you set it up that way, 35 quarter, gives you potential. If you want to be even more conservative, you can set it up with 34.75. That way, even if we pop back up to 50 area, you can get 3R. And for now, we'll leave this at 58. Similar situation here. I think, it doesn't really make sense to look for too big of a move. Just back up towards 50 would be sufficient. So in the event that we do go down into the 17 to 24 half zone, and I'm going to create one more variation of this zone as well with my stop behind the 15 high volume node. So 21.5 to 22.75 would likely be a good buy first time down, and you wouldn't need a major response to get 3R out of it. If you pop back up towards 47, 45, 50, you'll get 2.5 to 3R, which is good enough. Now again, these zones may not even come into play because we still need to see that break below 59 on signs of initiative selling in order for those zones to come into play. I think that's going to be sufficient as far as the trade planning goes this morning. And then again, we'll see in the moment how things are shaping up. As always, as day traders, we need to remain flexible and open to the market doing pretty much anything. And if things change, then the setups will be adjusted. And if a new pattern emerges, then that will be taken into account. But for now, looking at short side on bounces back into resistance, potential longs on exhaustion into support, and then potential long on any overextension into the range extremes down near the 44.22 area, maybe 44.33 area. So that's going to be a wrap on today. I hope you guys found some value in this exercise. If you did, then please do like and share this video and this post. And good trading and good luck today. Until the next one.